Is the red-hot gold trade cooling off? On Wednesday, the precious metal declined nearly 1% to 1409, coming back after its rally topped out at six-year highs on Tuesday. With me today is Peter Hugg. He's the Global Trading Director over at Kitco Metals. Pete, good to have you back on the show.
Yeah, it's good to be here again, Danny.
So let's ask you the question here. Is gold just taking an expected pause?
Well, this is that's a tough question. I looked at this on Monday, and I wrote a commentary that in my 45 years in the business, this level right here is a really difficult one to call. As you know, we've been extremely constructive, the gold market, ever since support of 1280. Seems like forever ago, but it was only about 5 weeks ago it hit those levels, and we've been in the camp that we believe the Fed was not going to raise rates in 2019, and there's been this attitude that the Fed is now going to be very aggressive on the easing cycle. And once we finally got gold through 1360, and that was helped by some of the tensions that recently arose with U.S. and Iran, gold just took off. I mean, 1365 was an area that gold had trouble with for the past 3 years. And once it got through there, 1400 was a no-brainer trade, which we suggested early last week. The question now over $1,400 is what's left from a motivational perspective to move gold higher in the short term. Now, the first thing you would argue is that there's a continuous short covering coming into the month end, which I think we saw at the beginning of this week. But now I think coming into G20, I think the market is going to be a little bit careful and just make sure and just to determine how, if there is going to be a resolution or not with the China trade tariffs. The G20 meeting is supposedly due to happen on Saturday. I mean, if they come to some sort of an agreement or delay further tariffs on China, that might take a bit of the sting out of the nervousness in the equity market, and the equity market may pop, which I think will give the Fed some pause. Mm-hmm. Now, I do believe the Fed's going to go in July. I just don't think they're going to go a half a point, right, unless there's a major issue between now and the Fed meeting. They're going to go a quarter point, which is in the market. So now you're looking for the next catalyst to take gold over the 1420 on a closed basis. And the only thing I see in the very short term is a potential issue with Iran. Right. So I suggested on Monday that if you're a trader in this market, my leanings would be to sell into strength and sort of play it from the short side with very little conviction. I'm not a bear here. And if you're an investor, you've got to hold the position, because if we can get through that 1420 on a sustained basis, from a technical perspective, there's only one level left before we see 1600, and that level's about 1470. So technically, there's not a lot in a way from this market exploding and going up to the $1,600 level.
Well, you brought up a lot of important points, Pete. G20, Iran-U.S. confrontation, Jerome Powell's comments, doubt over a rate cut in July. So there's a lot of moving pieces right now that we need to watch, right?
Mm-hmm. Well, again, this is not 2008 right now to 2011. It's not that cycle. I mean, I'm not saying that cycle isn't about to happen, and maybe the smart money knows something is about to happen. But you've had interest rates coming down, which has had a negative impact on the dollar, especially versus the euro. But even if the Fed goes a quarter point, let's give them the full benefit of the doubt and they go a half a point in July. Yeah. U.S. rates are still going to be about 1.5% higher than their European counterparts. So although I think the dollar will weaken, right, I don't think it's going to collapse. And, I think that's going to take further easing on Fed policy come into the fall. And also we'd have to look to see how the Europeans would react to that easing, because it's not in the interest of Draghi or the European Central Bank right now to have the euro strengthen against the dollar. It's counterproductive to their lower interest rate policy.
Finally, Pete, let's get some thoughts on silver. Do you come bearing some good news for the silver metal here?
Well, I would have expected it higher than where it was. I mean, it's up a dollar from the last time we talked. It was at 1440 the last time we spoke, and I expected a rally in silver. Quite to be fair, I expected gold to test 1365 and maybe hover around there and consolidate. I didn't expect to blow off to 1420. And I would have thought silver would have had at least enough juice to get up to $16. And I still think if this gold rally is real and silver and gold can get over 14.25, given the small amount of resistance levels above that level, eventually silver is going to catch it. And if it does, it's going to be up $1, $2, $3 within the space of 3 or 4 trading days. It's just a matter right now. It just looks like it's like watching paint dry right now.
All right, Peter Hug, good thoughts. We'll catch up with you soon.
Okay, nice to be here. Thank you.
And thanks for watching. Reporting from our studio here in New York City, I'm Daniela Cambone.